Hey, Steve here with another installment of Trading at Nadex. I'm going to talk about trading out of the money contracts in this particular video. Out of the money means the market's going to have to move in your favor in order to have a chance to win your contract. Again, you can check out all my particular videos at youtube.com/binary options, Mr. Binary Options. A lot of different videos out of the money, in the money, and different things. If you want my systems, mysimpletradingsystems.com. I suggest getting an Nadex account. It's open in over 40 countries now, and it's a great way to trade. The only place I trade myself. So I'm going to talk about trading out of the money contract here. I'm going to actually mix it up a little bit and look at the 20-minute binaries. Nadex has 5-minute binaries and 20-minute binaries now. 20-minute binaries deal only with indices, but I'm going to take a look at that for this particular video. There's about 11-12 minutes left in this particular trade. Out of the money binary basically means that you need it to move in a direction, in your direction, the direction you're predicting, between now and the end of the time. It's currently 1812. I'm going to take the 1821. I'm going to buy it. In this particular case, it cost me $20.50. So this particular binary cost me $20.50 to enter. At the trading time, again, there's about 11 minutes left. The Dow, this is Wall Street 30 is basically the Dow futures. The Dow futures were at 18,012. And my particular contract says 18,021. So I would need the Dow, or the Wall Street 30 to close at 10:20, which is 10 minutes from now, above 18,021. If it does, I would get a full payout, which is $100. It costs me $20 to get in, so that's roughly 400% return on investment. If it does not close above 18,021, I would lose my investment, which in this particular case was only $20. So I only risked $20 to win 100. So obviously the risk reward is very high. However, again, I would have to have a fairly significant move. I mean, it's not that significant, 8-9 points in 10 minutes for the Dow. I haven't looked at the Dow as far as today goes, whether it's a slow day or not. I anticipate that it probably was. So the market's going to continue to move, and it does what it does. If this expires, it'll expire at 0. If it expires at, even if it expires at 18,018, which would be higher than where I purchased it, because I purchased it when it was roughly at 1812, it would still expire at 0. The other thing I can do is currently the market's at $12, and I say, okay, it's too late in the game. I thought the move was going to happen. It didn't happen. I'm going to exit the position, and I could do that and exit the position for only a $7 loss or so right now. The other thing I could do is I think this is going to spike. This is not a system or a signal of mine. It's just a random trade. But let's say I think this is going to spike, but I'm not 100% sure that it's going to close above 1821, but I think it's at least going to touch it. What I could do is I could click on this open position. It's going to automatically have the opposite direction, which in this case is a sell. And I can say, okay, I think it's going to touch 1821, so I think I could probably sell this position for $49. So I now have, if I go over to my open position, or working orders, excuse me, I have a position here that says I'm going to get out of this position if the market for this contract hits $49. Currently it's at $15. In order for it to get up to $49, it would basically have to hit 1821 or so. So I don't have to stay in the trade all the way to the end. In this particular case, or maybe if I change that to, let's just change that now to $41. And the reason for that is that would be basically 100% return. So I paid $20.50 for it. If I got out at $41, that would be a 100% return. That would be $20, my $20.50 back plus $20.50 of profit. So there's a lot of different ways to trade it. Again, you know, you can wait until the 10:10 expiration. Again, that's 7 minutes from now. And if it expires above the 18:21 and I did not have this working order in, I would win the trade. If it doesn't, I lost my $20. But again, in this particular case, if every trade that you took was out of the money and they all average, say, $20, you need to win about 20% of the time in order to break even. So, say for example, every single trade that you took, it cost you $20 to get in, and every trade you waited till expiration for it to close. Again, everything is either going to expire at $100 or it's going to expire at 0. So let's say, for example, you traded this first trade, and this first trade cost you $20, and you lost this trade. The next trade cost you $20, you lost that trade. The next trade cost you $20, and you won that trade. So you would win $100. So you'd have $100, which is $80 of profit. Now, if you subtract the two losses that you had previous in this example, you would still have $40 of profit. So again, in this particular case, you don't have to have a high winning rate, and you're not going to have a high winning rate more than likely. But if you can risk $20 on something, and you can have a winning rate of, say, 30%, say 30% of these trades, say you had a particular system or whatever, 30% of these trades, you know, made you money, you would make money overall, even only winning 30% of your trades. The reason is because you know, you only have to win, in this particular case, about 20% of your trades in order to break even. So if you're winning 30% of your trades, you know, that's 30 wins out of 100. You're going to make some decent money. And if I just put that on a calculator a second, just for sake, I'm more of a visual guy. So just say, for example, every single trade, $20, and actually mine ended up getting taken out, as you can see in the open positions here. You don't see an open position anymore. It ended up hitting my stop for, or my limit order of 49. Hit that 49 number, I got out, so I got out with $100 profit, or 100% profit. But anyways, going back to the example, let's say everything cost you $20 to get in, so you had 100 trades like that. Let's say 70 of them were losers. Okay, 70 of them were losers out of 100, which means you lost $1,400. 30 of them were winners. So again, in this example, we took 100 trades, 70 were losers, you won 30 of them, so you have a 30% win rate. And 30 of them were 30 of them were winners. And again, every single trade cost you $20. Every single trade that you won 80. So you'd have $2,400 of profit. So dollars minus your $1,400 of losses is $1,000 profit in this particular example. Again, just a different way to trade. Again, you have to figure out you know, signals or systems or however you want to trade, looking at different things, however you want to trade. I just want to kind of show you there's a lot of different ways to trade at Nadex. So this was buying out of the money, and you can see that this particular example, you know, I put a limit order in and ended up working out. Now, whether I would have stayed in to the whole time doesn't look like it would have paid out, but I exited my position, I'm out, and you can see in my working orders as well, there's nothing there, so I cashed out at the $41 area for that. So hopefully this is helpful. Again, this is trading out of the money at Nadex on the buy or the call side, and I will have another video of doing it Nadex out of the money on the sell side, and show you that in a different video. So subscribe to the videos if you have not done so already, and I'll talk to you in the next one. Take care.